an oscillator of some sort, like a MACD, RSI, whatever. It's just an algorithm of what price is doing. So it's already happened, right? You know, the better you get, the less indicators you use.
So Richard Jackson, welcome on the podcast. How's it doing today?
Very good, thank you. And thank you very much for having me.
Pleasure to have you here. So you're in Melbourne. I'm in Vietnam right now, which is a little bit different pace, atmosphere, but it's pretty nice to have you here, of course.
Be nice and warm there in Vietnam at the moment.
Yeah, super warm, but like really rainy right now. It's really fast. Pretty crazy. So the first question I like to ask my guests is, what is one quote that inspires you?
Okay, it's a Larry Prezivenko quote. It's trade what you see, not what you think. I take a lot of Larry's stuff. I take a lot of Carolyn Baroden's information, Scott Carney as well. These are all guys that I, hold in esteem. So, these guys have, really solidified a lot of information for me so that I can was able to develop my own strategy and view of how a creative framework around how I trade the market.
Nice. It's awesome. I think that makes a lot of sense for most people, and most people do it wrong at first. They got to learn this over time. So I want to go back in time and tell people kind of how you started trading. What was that kind of first moment when you got into trading, and how did that evolve after?
Well, I guess, like all traders, the reason why we want to get into trading is because, it gives us a sense of, awesome identity. It looks like it's, gives us freedom, gives us, a good challenge as well. So these are all the same things that I went through. But I went through and I started off, my career was electrical engineering. So I had a computer science background and all those sorts of things, and mathematics. So I started trading, about 2004. I started trading stocks, things like that. And then I went further into, because I wanted something a little bit more dynamic, a little bit more fast-paced. So I went into trading in mini futures on the S&P, Russell 2000, DAX, etc. Okay, so I guess I cut my teeth there. Using tick charts, things like that, and then that went over the 2009 period. So watching limit down on the S&P, 3-4 nights in a row was pretty interesting, right? Not many people get to see that in their lifetime, or it's very rare that happens. So. But I guess, from there, because I'm in Australia and my family's in Australia, I have to be up in the middle of the night to be able to trade those things. So I took a step back and over into the FX space, still derivatives, but it gave me the ability to trade 24 hours a day and also write algos around it as well. So, that's basically a quick, synopsis of my history.
How was the learning curve for you to learn to trade? Was it hard? Was it simple? Did you get a mentor?
Okay, so yeah, it was tough, right? And I say this to a lot of the guys who I teach at the moment, is that, it took me 5 years of running around in circles, reading this book, reading that book, changing my strategy. My strategy worked, for a little bit, then stopped working. So then I'd flick over to another strategy. Went over to the University of YouTube as well. That didn't really help. Read this book, that book, then into chat rooms, got advice here, got advice there. Nothing really worked, right? And then I got my own mentor, okay? I got a mentor in Chicago to help me out, right? To put me on the right path. Also to keep me accountable, right, for all of my actions, okay? Because it's very easy, I guess, to start a trading system or go along and start trading, something seems to work for a while and then you completely blow up your account. Very easy. We've all heard that story 1,000 times. But it's easy for us to do it when we're in our bedroom. But if we're accountable to somebody, then, they keep us, making sure that we keep our risk to reward right. They also make sure that we don't overexpose ourselves. Right, because it's very easy to change your lot size when you're on a winning streak, or when you're just about to lose everything, you do the Hail Mary, right? And that's putting one lot on a $1,000 account, that type of thing.
Yeah, I totally agree with that, and I'm kind of curious to hear from you. Why do you think that YouTube or articles or books didn't work for you? Why was that?
It's not the books that didn't work. The information in the books, all of those books are, very good. It's just my interpretation of it was incorrect, right?
Uh-huh.
I didn't have somebody to be able to bounce off to say, well, everybody could read the same, one page, and everybody will have a different interpretation of it because of their own individual experiences. Does that make sense?
Yeah.
So then, I guess my interpretation or how I put it all together was a little bit different. But where it changed for me was, having all of this information and as arsenal, right? I guess, how do I put all of it together? Like, okay, so I know what divergence means. Okay, so there's some guys out there that trade divergence. There's some guys out there that trade and stand by Elliott wave. Some guys Fibonacci, support resistance, blah, 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 right? But how do we put all of it together into one global thing that will support us to get high probability trade setups, right? Instead of just using one component, waiting for that not to work and then flicking to another thing. Does that make sense?
Yeah. I think there's the other thing of the fact that you might read a book today and you get like a version of it, you understand something, then you read it like maybe 2-3 years after and you get a different perspective on things.
Completely different perspective because you've got some experience behind you, right? Because you've actually experienced the failure. I've got a guy that trades for me at the moment and I just had a conversation with him this morning. He said, because I've been turning blue, basically telling him that, just stick with what I'm telling you, right? Or to stick with the plan that, that we've developed. Because, if you keep changing or you keep doing this or that, then it won't work. So what has he done? He's gone out and changed it and done his own thing, right? But he's had to go to that space, right? To be bitten, to lose some money, to get the pain that's associated with it, to understand, to come back and do it properly. Does that make sense?
Yeah, that's a chat I had with a lot of traders in the past. So do you think that the losses and the failures are essential to become a good trader?
Absolutely, 100%. Because the thing is if, a lot of young guys will come in with a jackpot view of the market, right? Think, okay, well, I'll put $5,000 into an account, start trading one lot. All I need to make is $1,000 a day and then, I'm in the Bahamas, right? But they have to go through the pain of losing it to be able to go, okay, well, now I'm going to be conservative, right? Now I'm going to really be patient and wait for those high probability trades, right? Because the thing is if you open the charts up, it doesn't mean you have to trade, right? Yeah. Just because the charts are in front of you certainly doesn't mean, I'll try and look for a trading opportunity. What we've got to do is we've got to let the trading opportunity come to us, right? It's like I've got a fishing analogy, right? There's a fishing analogy. If I go, let's say that my trading system is my rod and reel, right? And my bait and my hook, right? But when I'm ready to go trade, which is 12 o'clock during the day when the sun's blaring, right? And I go trade, I start fishing, right? Okay, I'm not really going to catch much, am I? Okay. But if I'm patient, right, and I wait for the right time, wait for the sun to set, I wait for all of these things to come and line up, right, for the best high probability chance of catching a fish, then I've got a higher chance of catching that fish. Does that make sense? I can have the best trading system on the planet. I can be all of these things, but unless the fish are there and we have to wait for those fish to come to us, then we're not going to catch anything, are we? Does that make sense?
Yeah, that makes sense for sure. And the issue I feel that a lot of traders face is that if you were to fish, then you cannot force things too much. But if you trade, you can force things and take trades that you shouldn't take.
Yeah, that's
how do you make sure you don't take trades you shouldn't take? Do you have a process?
Well, okay, so I've developed this my trading plan looks like this. The first thing I do is I ask myself 2 questions, okay? For every trade that I take, I ask 2 questions. One is, what are other traders seeing on the page, and what are they thinking, and what are they seeing? The second question that I ask myself is, what is obvious? What's obviously there, right? Because there's a thing called confirmation bias, right? It's a human trait, right? Confirmation bias means that we tend to create a belief for ourselves, and based on that belief, we will take action on it. Okay. So let's say that I believe the Aussie dollar is going to go down. Okay. We're at 68 cents. I reckon we're going to go to 66. Okay. I've created in my head an absolute solid belief that the Aussie is going down. So therefore I stop looking at what's actually on the chart. Okay. I stop seeing it all. I just see what I want to see. Does that make sense? So you're curve fitting what's on the chart for your own belief. Does that make sense? Mm-hmm. That's one of the biggest problems that a lot of traders go across, right? So that's why I ask myself, what are other traders seeing and what's obvious, right? So stop thinking what I'm believing in and start thinking about what everybody else is believing in. Does that make sense?
Yeah. How do you understand what other traders see or think?
Well, the first thing is to firstly know all of the technical strategies out there, like Elliott wave, getting your Elliott wave counts right, understanding divergence, understanding trends, support resistance levels and all those sorts of things. Once you understand that, then understand what the fundamentals are as well. And as FX traders, we're not really interested in micro fundamentals. We're looking at macro fundamentals. So really the only ones that we're interested in are interest rates, employment, NFP, and CPI. Okay, if we do GDP is a lagging indicator, right? If we're looking at housing starts, it might be a little bit too small because it is a component of GDP, but they're too micro for currency to be shifting. Okay. So understanding those type of, like all of the components together will give us that ability to, have the good trade.
Mm-hmm. I'm curious to go more in depth also on that a little bit later, but what is your trading style these days? What does that look like?
Okay. So I've got two trading systems that I use. Okay. One is a swing trading system, which we, use 1 hour chart. It can be used on 15. I've got traders that use it on a 15 chart. 5-minute chart, but I prefer a 1 hour chart for myself. Do all my Elliott wave counts on 4 hour charts. So that's a swing method. Okay, we're in a trade between 24 hours and 5 days. With a news release strategy, we've got news release, so we look for a differential between consensus and actual, and based on a certain deviation of the consensus and actual, if it's wider than 1 or 2 standard deviations, then we'll be able to take the trade. Okay. And that's down on a 5-minute chart. Okay. There was an example of that recently, where the Canadian employment figure was greater than expected, and the NFP came under, which was last week, if you remember it, right? Mm-hmm. So there was awesome CAD trade. Okay. So, buying CAD was really good. So they're the two strategies that we run.
Cool. And can you kind of guide people through what are the things that you look at in the market? So we talked fundamentals a little bit, but what are the kind of steps you take to be able to get good setups that are high probability?
Okay, so the steps that I take to get a good trade is firstly ask myself those 2 questions that we touched on before. The second thing is to filter out the market. Okay, so there's a filtering process. Should I keep going? Let's say that we're in a trend. Should I keep going long if I identify divergence? So therefore, I won't continue going long. Do I have a break of a trend line? Do I have a technical reversal, or a classic technical reversal pattern? Do I have a harmonic of some sort, like a butterfly or a Gartley pattern that exists? So if I can tick box a number of these different filters, then that might give me an indication that it's a good chance to trade. Once I say yes to myself, then all of the ducks are lining up, then I've got an entry condition. And that's usually based on what I call convergence, right? And that convergence is the move from, if we've got a Fibonacci on a leg, okay, so a trend is made up of legs. on a single leg, if we've got a retracement to around about the 50 or the 618 Fibonacci retracement, and that also lines up, not on its own, but it's got to be confluence or converge with a moving average or a trend line of some sort, a support and resistance line, okay? Or if all three, even better, okay? And there's certainly in the FX market, as you probably already know, there's some significant moving averages which act as a support and resistance on a very common basis, right? So if we get that convergence, then that's an awesome entry. So that gives us really good market timing, because when you trade, market timing is probably the key to the whole thing, right? If we get good market timing, then we've got the ability to reduce our risk, right? So that we get a higher risk to reward on that single trade. Then overall, with a system R multiple, we've got a very, very good risk to reward on that. Okay, does that make sense?
Yeah, that makes sense. It's kind of a step-by-step checklist to go through.
Exactly.
And different criteria. Are you going to trade both trend continuation and reversals, or only one of those?
No, I'll do both. Absolutely, I'll trade both. Right, I'll trade. If I see the opportunity there, then I'll take the opportunity. But it's got to fit all of the conditions first. Yeah. Mm-hmm. And so if I get, like, just to continue on that, so if I get a reversal pattern, right, and then break of a trend line, then I'll take the trade, right? Mm-hmm. That's a reversal. Now, if I've got, let's say that I'm on leg 1 or leg A of Elliott, then I'll take that in the direction of the trend. So both.
It seems like you're using a lot of indicators and kind of tools like Galloway, Fibonacci to look at the market.
Okay, so let me just say this. You'll be quite surprised. Okay, the only indicator that I've got on my chart is an RSI. Okay, and I've got and 3 moving averages. That's it. It's very, very basic. Mm-hmm. And a Fibonacci tool. That's all I use. So most of what I'm doing is price action.
Okay,
price action is the key. All right,
and that's what I was going to ask you exactly. So what are the 6 people that think that price action is the only way to trade, or the king?
Well, it's the king. It's certainly the king, right? Because, you got to remember, all oscillators or indicators, they're all lagging, right? Price has already happened by the time an oscillator of some sort, like a MACD, RSI, whatever, it's just an algorithm of what price is doing. So it's already happened, right? The better you get, the less indicators you'll use. Yeah. Mm-hmm. So price action, the leading indicators we use is support resistance. Yeah. So fib levels, all of those sorts of things. Okay. So most of what we're looking at is all leading indicators based on price action and looking at price action patterns, AB equals CDs, Elliott wave, all that sort of thing.
Okay. So then what is the role of indicators like the RSI and moving averages?
The role of the RSI is simply just to confirm our divergence. That's it. That's all it does. Okay. We don't use it as overbought, oversold. We just use it for divergence purposes. Okay. The moving averages are there for support and resistance. So we're using them as leading indicators. Okay. And then we just use trend lines, etc., as leading indicators as well.
Okay, that's interesting. So because some people might feel that this is like a lot of parts and processes to learn.
Correct.
How should they go about it? Should they start with like one thing to learn, apply it, and then go to the other one?
Well, the thing is, if anybody's coming in thinking that trading is going to be, you're going to be an expert trader next week, then it's just not going to happen, right? No. It's usually, the guys that I teach, right, it takes them 12 months to get there, right? Back testing, if manual back testing, I've always said, Harry hindsight, Harry is the best trader of all, right? Because he's already been there. It's very easy to trade in hindsight. So manual back testing is very, deceptive. Okay. I guess, all of my traders, though, when they go out and they learn, right, or I'm educating them how to do it, then they do it in real time. Okay. So, yeah, did I answer your question?
Yeah. Okay, so it takes time to learn, and you got to go through all the steps, I guess.
Yes, you do. Yeah.
Cool. So right now you have a business where you teach people, and you also run a kind of prop firm or capital management company, right?
That's right. So we've got two arms to our business. We've got our prop business. Okay, so in the prop business, we use our own funds. I bring guys on to learn. There's two aspects to that. They can either learn on their own, or they can get me to mentor them. Okay, mentoring takes about 12 months. The capital side of it, Jackson Capital, is agency funds. So we get investors in through what's called a managed discretionary account. Okay, so that's all agency money.
So how did that idea kind of come along of running a capital company?
Well, I started off being a capital. When I started off, I was a broker, right?
Okay.
So then I wanted to run my own investment company. So, using the same licenses as when I was a broker, I could just become a corporate authorized representative of the AFSL that I'm using. So then I, put it into an MDA and became an investment manager, basically, trading for myself. But, as years go on, I don't want to, I want other guys to trade for me as well, right? Or trade the money as well. Because what that does is that if I've got more than one guy trading for me, it smooths out my equity curve, right? Because essentially with an individual, the fund has specific risk on me, right? Which means the balance of the equity curve can move, right? But if I've got multiple guys, it smooths out the equity curve quite a bit, right? Which is, that's the benefit of having multiple guys on there. And that's why I started educating guys on how to trade. And then I guess the next question that you're probably going to ask, right, is why would I teach 5 guys to trade exactly the same way that I trade? Would they all take the same signal, right? Mm-hmm. Would it be funny? I thought that too, right? But the truth of the matter is that very rarely do all the guys take the same signal, right? But we've got the ability to be exposed to the market a lot more.
And the next question to this that I'm curious about is, how do you spot a good trader? How do you find them?
Well, you don't. You can't.
Okay.
Right? There's a lot of guys that have come through this and they've come and gone, right? The guys who are good, how do you get a good soccer player or footy player, right? They have to go through the under 12s, under 13s, under 14s, to the seconds, and then, they get selected all the way along. I don't know who's a good trader before they walk in the door. I just don't know, right? Usually the guys who do full 12 months with me end up trading for me, right? And I guess that's a good thing is, my intention is what I need traders, right? And my intention is, we're batting on the same side, right? Meaning that I need them to be a trader, so I'm going to put all my effort into it, right? It's not just, here's some information, see you later type of thing, and then come back to me when you think you're good.
Yeah. And what do you think happened with people that kind of in general give up trading? So let's say they have to learn for 12 months or whatever time they need to, but then they give up. Why do you think it happened?
That's a good question. Things get in their way, I guess. Family, whatever, everybody's got a different reason why, they just don't have the acumen for it, or they just don't have the drive. They're busy with wives and kids and their jobs and all those sorts of things. So, they didn't realize it was going to take so much dedication. They didn't quite realize it. But I guess the guys that, do have the dedication for it, end up getting there, right? It's not rocket science, right? There is a lot of components to it, but it's not rocket science, right? You do have to learn a lot, but, it's not something that's outside the possibility that, that anybody can really learn.
Mm-hmm. And in your case, I'm kind of curious. So what made you not give up trading? Or did you have some time where you felt like you wanted to give up?
I'm a dog with a bone, mate. Right? Mate, I don't give up on anything. I wasn't going to let it beat me, right? I was never going to let it beat me, right? Because this, I really, really wanted to do it, right? It was something that, I've always had interest in, all those sorts of things. And, I really, really did not want to give up, throw in the towel, right? So, I guess I just kept going until I got it.
Mm-hmm. Awesome.
But I did it the slow way, right?
Yeah.
I went from book to book and all over, round and round in circles until I went, okay, well, I need somebody to actually show me how this thing's done, right?
Mm-hmm. And what would be your advice for traders that are looking for a mentor right now? Like, they're not sure who to pick, and maybe they follow like 10 different websites, 10 different YouTube channels and everything, and they don't know like who to pick to be mentored by.
Okay, well, just find somebody that can, will pick up the phone at the price point that you want, all those sorts of things. If somebody's out there wanting to be a trader, mate, I want you, right? Okay, I'll put it out there now, right? And this is why I'm doing this podcast, is because, I need traders and I want to, get the word out there. And I've got the, Convergence Trader, ethos that I work with, and it's all ready to go, right? For anybody who does want to, have a look at what we're doing. But I guess, it is hard. It's not easy. This is not, a very largely established type of, education. It's not like going to university and knowing that, Melbourne University is the best university in Australia, right? It's not well known, right? So, it might be a hit and miss, but, I don't know. It's read their website thoroughly and ask a lot of questions, I guess. Yeah.
And at the same time, I think university doesn't need you anywhere, even though it's a good place and stuff. It doesn't need you to. Right.
Yeah, well, that's especially with guys that I mentor. I've got a guy in Italy, I've got New Zealand, I've got Central Queensland, I've got a guy heaps of guys in New South Wales, Sydney. So, they don't have to, be sitting here next to me. We can just do it, over Skype and TeamViewer and all those sorts of things. Cool.
Is there any topic we didn't cover or touch on that you feel like you have to talk about, or anything you think is very important?
I think I reckon most guys will probably get a lot out of this. I haven't gone into specifics, but I guess the main things, just to summarize for anybody who's trading, make sure you don't make up any ideas in your head and think it's gospel, right? Trade what you see, not what you think. Larry Prezevenko, read that book. And also the two things that really make a great trader: really good market timing and good risk to reward, right? Because we're all working with statistics in the end, okay? And the thing is, what I want to touch on maybe is that the market is a stochastic process, meaning it's completely random, okay? If you look at all the closing prices of a chart, right, and you take away the candles, take away everything, right, just the closing prices, put a dot on each closing price, it's random, right? So you have to use statistics and probability, okay, to trade. You can't have a certainty on any single event or any single trade, right? All right. I guess that's it.
Yeah, and that's massive. So for me, when I started to think about numbers more, that improved my trading a lot because I didn't care about the result and the outcome.
That's right. And it also, when you start thinking about that, it makes you calmer as a trader, right? Because, usually when you start trading, you're all nervous. I remember my heart pumping, right, when I put my first E-mini contract on, right? I think he has to win. And of course I lost it, right? But, if we start looking at it as a trial, as a group of trades rather than individual trades, then you're going to expect some of them to be losers. But that's why we need to have good market timing so we get our risk to reward. So we have very small risks and very big rewards, right?
Cool. So where can people find you if they want to connect with you or reach out after this interview?
Okay, so there's two ways of doing it. If you want to learn on online, go to convergencetrader.com. Okay. If you want mentoring off me, go to lepusproprietarytrading.com.au. Okay.
Awesome. We'll put a link in the show notes for that. And I guess also on social media.
Social media, Lepus Proprietary Trading. Find our page there, and you'll be able to friend us on the page.
Cool. Awesome. So, Richard, I'm curious to hear, what are your goals for the future?
Well, I guess, keep growing our fund. We've got a lot of money out of Europe, but we've got a lot more coming. My goal for the future is to get some great traders. We are going to open up the futures space again, but that's, later on in the year. But for now, I need good traders, and I really hope that I can get some more good traders to start working for me.
And what's your main motivation to grow that business?
Oh, money, mate. It's the same motivation for everybody else, isn't it? Better lifestyle, some more money, go on holidays, have the freedom, make sure my son goes to good school, all those sorts of things. So, I just want to share what I've been doing, and make sure everybody else, has the opportunity to be able to partake in it.
Awesome. So I have this one question that I ask all my guests at the end of the podcast for the interview, which is, if you could give people one piece of advice on how they can thrive as traders, what would that one piece of advice be? Okay,
the advice is be patient. Okay, just be patient. Don't expect the trades to be there or the good ones to be there all the time, but just be patient.
Richard Jackson, thank you so much for being here today. It's been a pleasure to have you here on the podcast.
Okay, thank you very much.